The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome, folks, to another wonderful edition of the Power Trading Hour. We've got a market on light volume again so far, up about 8 points on the S&P cash. But so far, tepid volume for breaking through higher highs. Actually is, 2.3 billion shares, which is kind of a summer's day kind of move higher out here. And I guess it's Bernanke's bubble, and I just get to live in it. But we continue watching this market drift up higher on lighter volume, and the question is just how high can it go before the house of sand collapses. Eventually, Bernanke is going to have to either pull that money out or quit pushing more money in, and at that point, how fast do the people that own all these stocks and bid them up way in advance of their underlying financials go through them. But that's neither here nor there. We've got, not a huge move out here, 8 points, 2.2 billion. I think I said 2.3 billion. So we've got some stocks in the move, out in moving today. FSLR, typed the wrong symbol. FSLR. There's a couple symbols I have problems typing, even on my home keyboard. And once again, yes, you can tell that Steve's at the helm of the controls. If you were listening to lead-in music and had to endure the horrible blaxploitation audio track from some really bad movie, probably bad in the 70s. Anyway, we were looking at First Solar today. This stock has always baffled me. I guess the belief that you'll get the kind of earnings out of this thing that you want as a company. There's two companies right now that seem to be rolling on, not that they're doing good, but they're not going out of business tomorrow. Are they making significant money? No. But the two right now are First Solar and Tesla. Both of them running very hard. We'll look at Tesla in a moment, on what is extremely dubious financials. I wouldn't mind if Tesla was like $20 and stayed there until they proved that they could make money. Same thing with First Solar. They came out last night and they were printing about $51. I didn't listen to the earnings call, but hopefully I'll get a chance tonight. It's off about a 9% on fairly significant volume so far. It did have huge short interest. Last time I checked in was about 36%. Tom last night on his show said 30%, so probably one to stay away from out here. But we're seeing a lot of these stocks pop it, and it is there's just not a lot of there to a lot of these companies. The problems with First Solar, like all solar companies, is it's still somewhere between 3 to 8 times more expensive to put a solar system out. And, of course, why no one's really talking about it, most of the solar cells will only last about 10 years, not the 20 or 25 years that they think the system will last. I think that it's kind of the same problem with the electric cars. Probably for a Tesla, $70,000 wouldn't be bad if the battery pack lasts 10 years. But you're probably going to see that these battery packs last somewhere around 3.5 years. I noticed that Tesla was putting basically a bumper-to-bumper warranty, including the battery pack on it. That can only mean one thing, and that is that if they do not grow into this business very quickly and have some kind of replaceable battery pack for it, at a much less or much lower price. They will probably in about 2 or 3 years hit a absolute floodgate of replacements for batteries. They've been making a series of missteps, but no one really cares. We are, at least in my opinion, the go-go days of the .com. It really doesn't matter if you've got a business plan that actually works. It's whether or not you can actually bid the stock up, get enough shorts, and run it. And, if there was something there it'd be different. But if I'm across the street selling gasoline for 2 to 4 times what you're selling for, it's almost impossible for me to believe that there's any kind of long-term business plan there. The idea for both these companies is betting on the come that one day that their technology will, that new technology will be there to allow them to actually be price competitive. But I don't know if you can buy probably a top-of-the-line M3 or a BMW 3 Series for probably almost half of what you can buy a Tesla for. And my guess is that the cost of ownership would also be half after the first battery replacement. I think they're only going 3 years out on the battery also, and that may be somewhat problematic. In fact, if I was going to buy a Tesla, I knew they were going to be in business, I might have to, a dubious person, let me put it this way, might think of blowing up the battery to make sure that it got replaced just before the warranty ran out and got another 4 years' worth of battery life. Of course, those batteries sulfate, even the lithium-ion ones, and after time are going to be, only 90% of what they were when they were new, and sometimes 80%, and then 60%, and then 50%, and your 230 miles suddenly becomes 120 miles. And, the cost of charging them, not a big deal, maybe $1.50 of electricity to go 220 miles, but that's when it's brand new. You also have to think of how all that stuff wears out. Electric motor and transmissions, by all reports, are good. The rest of the car, it's hard to really think that people make really bad cars anymore. You just pretty much go out of business. There's so much technology, so many lasers that can measure everything up the whiz-saw, and I'm wondering if that's like gutter, or is that like ghetto speak? I was going to say up the wazoo, mispronounce it, but it almost sounds like the Izzy. Anyway, we're kind of at this range. But anyway, coming down, this thing looks like it's probably going to run right back into this huge move up day. That was on the April 9th that had 40 million shares, 40.2 million shares. So you're probably going to find some decent support in this thing right around that $41 level, and the congestion probably down into the 38s. If you look at just a standard retracement level and confluence levels on this, if you come back, it gets down into the 35s. But I think you're going to, I'm really looking at that worst case scenario is probably back in that $37 range. The February 19th high out here with 9.9 million shares looks fairly decent. But these are companies that are going to be always significantly with a short interest. So you're going to have to take a look at them. TSLA, take a look at this one. This one probably had more range to it today than any others, and, of course, more news in this whole sector out here. But quite a bearish engulfing, if you've ever wanted to see one. Normally, it wraps itself around the other one. This one, a pretty significant reversal system reversal signal on Tesla out here. And, even if it just does a 50% retracement from where it took off at $33.80, is $48. So still have a significant pullback possibilities. There's also a nice little gap out here. But the confluence level runs from about 44.71 to 48.29, but that's still awful wide. So it's probably more of a congestion zone than a real good support area. But I'd say probably there's a lot of things that line right up at that 50% mark. The 318 of larger Fibonacci, just the natural retracement from the last leg, and a nice little gap. And let's see where that gap popped up. That was on the 22nd. 4 million shares, so not all that significant. But if you're looking at it on Tiger TV or in the Den, fairly significant. But we've got that both of these companies back in, I'd call them alternative energy companies, or at least surrounding that sector, seeing some big movements to the downside today. Other stocks moving on news was Microsoft. The drumbeats for Steve Ballmer's head, who's the CEO of Microsoft, are getting a little bit louder today. They announced a complete redo of Windows 8, and they're going to do a major upgrade. They are also going to do in-place upgrades for the operating system. And it's been rumored for a little while. But basically, you're going to buy an operating system, and every 3 months, they're going to download enough patches to make the thing almost brand new. The whole idea seems a little flimsy, and normally the patch route has been a little better, but going to be almost a cloud-based operating system in the near future. And the question is whether or not Ballmer will still be there. The real move past $31 in Microsoft is all about an activist investor fund that has bought $1 billion and talking about buying yet another $1 billion worth of Microsoft stock. These are the same kind of people like Icahn that run around filing lawsuits, throwing phony letters, embarrassing the CEO. The whole idea behind Microsoft's push and higher profits is this activist investor company going back and splitting Microsoft apart from its operating system and its business units and trying to unlock some of the value that's been in there for a while. They have been very vocal about getting rid of Ballmer, and the question is whether or not they can get enough people to come along and sign on to him to get rid of him. I think Bill Gates still owns 5% of the company. Oops, we're going to break. We'll be back in just a minute.
TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rose, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, I had a question in the den. I guess we'll pick up on Microsoft where we left off, and that is Windows 8 and a total redo. Most people, I guess the question is of security. And I think there's actually two parts. There's a thing that I use called SkyDrive, and that basically puts files on a cloud server, but also at the same time they're on your local machine. And I use it to keep files at the studio. I'm at my palatial estate today and not in the TFN offices. But I use it, and it works fine, but it's like any kind of Dropbox product. It's just a lot more integrated into the operating system. There's also the issues with using the cloud-enabled versions of Word and Excel, and whether those are on and copied on the server, and they actually are backed up. So if you're doing any of the office productivity work, you can certainly find your files in a shared cloud server. Yes, more and more of these systems are wanting to host your data for you so that they can also host the applications, and by doing so, they can gain a lot of information on you. Google has made a absolute mint on selling that data, and in fact, just today, the California, I think, State Senate was supposed to vote on a bill that would probably have ruined a lot of plans of companies like Google to continue reaping the huge profits over data farming your particular data. But most of them threw, I think, a bunch of wads of cash at the congressman in California, and it didn't go through today. But it may anytime soon, actually. And I guess that brings up legal implications from what we saw last night, which is the Senate actually passing the national sales tax, and seeing a little weakness earlier from Amazon and eBay, but no reason not to buy them because, of course, the market is only going up. Anyway, the answer is yes and sort of, depending on what you're doing. If you're using the newest cloud versions of the operating, especially the cloud versions of Office, some of those files, or most of them, will end up on their servers for them to pick through, although I think they have a privacy policy on most of those. Most corporate individuals are not allowing those versions, the 2012, 2013 version of Office on their machines for that reason. That they cannot guarantee the safety of Windows Server. And I think that's been part of the problem with corporate data companies going to Windows 8. Partially. The other thing is not being able to get through the tablet-based interface when you start. Very pretty, but Windows machines are content creators. They are not content consumers like tablets. I don't use a tablet very much, except when I'm like watching a movie or listening maybe to a downloaded podcast of, I listen to a lot of comedy podcasts like Adam Carolla and those things. But for the most part, if you're actually interfacing with it, even Bill Gates said yesterday, people hate the tablet experience if they're actually trying to create any kind of content. So the whole security issue is still a big issue, your files and whether or not you own them. And basically the law going into it is if you allow someone else to see something you have or even host it on their machines, then as far as illegally goes, you have no expectation of privacy. So once it goes on there, theoretically, at least the government and the Obama administration are still arguing in the courts that it's free game and you do not need a warrant to look at it. The government can look at it all it wants, 100 times a day. If it wants to, there's absolutely nothing they could not look at. So I don't mind using the Dropbox kind of products for things I share, but none of my personal documents would go on the newer versions of Word or Excel or any of those things. We'll be back in a minute and start getting into some more charts.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
As we come back, as always, you can email me at PATH, that's Pat, at TFNN.com if you've got a question and can't get to the phone. I am at home today, so it's easy for me to check my email. So if you want to get one in, I'll try to answer it in the last segment when I check back in. And what else do we have going on? Just wanted to talk a little bit about Microsoft and wrap that up. But they have announced that they've sold 100 million licenses for Windows 8. It's kind of hard to think that 100 million licenses could be a failure. But I guess the question is how many of those licenses are to the corporate user. And the reason why that's so important is those corporate users will be buying Word and all the rest of it. And about 80% of those are retail clients, either very small business and or home laptop users, not the big boxes that can consume a lot of resources like databases and servers and all the other stuff. The whole idea of an operating system that Microsoft can get, $4 or $5 grand a year out of. And that's especially on some of the higher-ended systems out there, especially servers. The licenses and all the special licenses can run into $4 or $5 grand a year. Volume licensing, of course, a little less than that. But the top line on their price sheet would take you into that $5,000 level. Even if they cut that off, imagine having a machine that costs $500, but as a software provider, you got $2,500 for. That's why Microsoft has always been a big company. What can you say? I think that it would be a much bigger company without Ballmer, but that's going to be very hard to force him out. But so far, everything he has touched since the day one has not been a rousing success. And the only thing he hasn't touched, basically Xbox, ended up being a huge success. So, I don't know. I just think Microsoft would do much better. Of course, I'm a big Microsoft fan. I don't know. I'm more of a Southern California, Texas, Florida kind of guy instead of a San Francisco one-upper, which is, I don't know, this is the attitude, I guess, from the Mac people has always been, just I'm a little smarter than you. It always just gives me a little bit of a cringe, I guess, being around them. Redneck is what my producer says. And, maybe I'm more, you don't find a lot of motorheads and racers in the software circles and hardware circles. Most tend to be very cerebral. I tend to think I'm a good mix. Anyway, when we're looking at some stocks out here, the one I wanted to follow up from yesterday and see that still nothing happening in is Beam. BEAM is the symbol on this one. I had a nice little pop of April 2nd at 66.21, 2.5 million shares. It's trying to get through that today. And what have we seen so far? Just light volume and, of course, a pullback inside that trading range. We've had a lot of that. I'm speculating now that the broad markets are doing the same. We've seen it in IBM and some of the other stocks. And it continues to be interesting. Oh, I wanted to get back and look at one that I didn't have a chance to look at, if I can remember what. Oh, QIHU. I think it's a symbol on it. Yeah. This one took off. Still, let me go back to 6 months here because that's what I'm looking at. The highest volume on QIHU, I guess that's how it's pronounced, 360, QIHU. The January 24th, 2013 high is the one I'm looking at, $34.37. Almost 8 million shares. Tried to get through it with 5.6 million shares. Broke through it, closed above it, but on 5 million shares yesterday. And a lot of these out here look like they could do that kind of breakout, pull right back into the trading range. And I suspect this is one of the ones that's going to be the canary in the coal mine. Can it continue moving in? Will people start buying more of this with China acting a little weird these days? That's kind of interesting. Anyway, other stocks of interest. Citigroup, so far today, this thing is challenging its previous high on a lighter volume. We'll have to see how this thing closes. But Citigroup, symbol C, probably the dog of the pack, March 11th high, $47.92, 51 million shares. When we look at it May 7th, it has a high out here, 48.27, 29 million shares. So we've gone above it. Do we close above it? We're probably going to close above it unless something major happens before the end of the day. But it looks to me like it's going to be short volume by probably 20%, if we look at what happens out here. So we continue to see weakness in certain stocks, but not all of them. The Willies. Okay, what else do we have going on? I wanted to look at a few other ones. Cavium Networks, CAVM. If you're looking at stocks that potentially could be setting up ABC downs, this could be, it's getting very close to where it gapped down on heavy volume, just a few bucks more. Let's take a look at the retracement real quick here. It has 34.08 would have been the 50% retracement. It's gotten very close to the 618 retracement at 35.37. 40 cents short of that. It's going to be getting into that high volume down day, which was the 5th of April, and that came on some fairly significant volume of 2.3 million shares. We're back up again through that gap with 1.1, and that was yesterday. Today, about 500,000 so far. So, again, some of these kind of very interesting classic chart patterns. Another one, Legg Mason, another one of these broker-dealers. This one's very interesting, and it's having problems up here at the high. Very light volume, making a doji out here today. Legg Mason, symbol is LM. First high was March 21st on 3.5 million shares. Tried to get into it, ran about 15 cents short on April 11th with 1.4 million shares. We had that yesterday, so equal the previous attempt, but unsuccessful breakthrough. Today's a little less than 700,000 shares so far, but going up against those high volume moves. The 3.5 million shares on the 14th of March. 14th of March continue to look interesting. And see. What else do we have out here? Wanted to get into some other stocks, and I'll get a chance. PMW. Let me just pick up a few of these out here. This is another one, Protolabs. Another one up here, and this one, of course, first major high out here, February 13. Huge sign of strength. Comes into the February 13th high, 53.91 with 3.1 million shares. Tries it again on April 11th with 1.6 million shares, and basically 800,000 shares just a few days ago, and very light volume for the next 2 days. Still hanging out here at the highs, but another one that looks like a kind of a nice trading range setting up. You did have a higher volume low, and that was the April 22nd low at almost 800,000 shares compared to the February 26th low with 360,000 shares. So probably a good indication that this one at best is range-bound, but a good one to keep an eye on out here if we're looking for some stocks. Western Digital, another one that is breaking out on light volume today. We'll have to see whether or not it can hold these highs. It's going up against the April 25th high, 57.96, where it spiked up on very significant volume of 7.5 million shares. We've gone into that with 2.7 million, 2.8 million shares yesterday, and probably going to get maybe 3.1 million shares today. Be very interesting to see how this closes, and I'm going to say it probably does over the 57.96. But it closes back in this would probably be a good indication that this thing is finally topping out. WEC, and Wisconsin Energy. What else do we have out here? The Wendy's Company. This is kind of interesting. I haven't really spent a lot of time looking at Wendy's, and of course, not a very shortable stock, but another one that had two major spikes in the 11 and 12 million share range, $5.95, 11 million shares. So yesterday we got in through it, and it closed above it on 7 million shares, pulling back a little today on almost 4 million shares. I wanted to see what we had for movers in the S&P, or excuse me, the NASDAQ 100, and so far probably nothing so significant. DirecTV's up. Let me update this so I give you current numbers at the time. What do we have up here? Let me get back down. Nope. Not only do that, but I have to sort it. What do we have again? Oh, okay. DirecTV, DTV, 61.85, up about almost 7%. Yahoo up 3.5%. Expedia, EXPD, Expeditors, EXPD. I think that's Washington Expeditors, isn't it? Yeah, Expeditors International of Washington, D.C. One of the stronger stocks, but not very much volume. Looks like it's going after this $39.78 high from March 6th, 1.8 million shares. So volume today is not that bad. Looks like it might be able to get into that and go higher. Other stocks, Baidu up 2%, $1.75. And let's take a look at that since we've been watching this thing. One of the more weak stocks, especially in the Chinese sector for these, especially Chinese web brokers. Yeah, this thing's kind of bouncing off the lows. Still high volume that needs to be tested on the 426 day with a little over 14 million shares. So you got to assume this thing's probably going to come back to that low $84 range once again. A lot of overhead resistance in Baidu. Of course, a huge gap between 107 and $99. That's probably going to be resistance for some time in the future. See if we have anything else. Monster Energy up almost 1.5%. MU up 1%. On the downside of the NASDAQ 100, the worst one is off of 5 cents, which is BBRY. Of course, BlackBerry. This thing's pretty much a dead meat. And if it wasn't for the overwhelming 50% short interest, it would probably be a $5 stock. Unfortunately, it's easier to go ahead and gun this once in a while and move it, and it's become a trader's toy. But probably not really directing or reflecting much of the underlying financial weakness that's in this company yet. One day it will, but it'll be a while. I wanted to say something about UNG because it didn't do it this time, but it probably is coming back into this $18 range. Someone brought up natural gas out here, and probably coming back $18 probably in the doldrums of summer, I would imagine. We had a nice little spike, probably unexpected, from a very late winter, and of course that especially when the contracts run out, you can get a nice little spike in natural gas, which is what we did with the late winter. But that's pretty much faded now, and we're probably going to come back, I'm going to say, into that $18 range come midsummer. And this one, had a little start. Maybe this was the beginning of a big move in natural gas, and hopefully we can get back the lower the better. And I would say probably somewhere around July, 1st of August, if you were going to buy a long-term hold, this does not look like a bad way to set this up, and it would be interesting. But I think, again, you're probably not going to see the big moves until September or October in this, but my guess is that this thing's probably going to come down, make a nice little floor out here, hopefully in the $18 range where we should find some massive support, and have a nice little run on it. What else do we have? I'll get back in a minute. Anyway, I'm going to check the email, see if anybody had a question for me. You could always email me at pat@tfnn.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
And as we come back, just wanted to remind everybody that tomorrow night we have a free Art of the Chart webinar. You can go to the front page of TFNN, check it out. But Tom and I will be sitting through, and he'll be asking me questions, and I'll be answering them about the Art of the Charts. Of course, if you are new to this program or new to TFNN, and you've wondered what all this business is about ABCs, expansions, retracements, Fibonacci's confluence levels, and you haven't read Tom's book yet, or even if you have read his book, you might want to take a look at the videos that I've done for Art of the Charts on the website. They are short, sweet, and swallowable versions of how the program works, but also show fairly extensive and easy-to-understand examples of exactly what we're looking for in these charts and what we're looking for on the patterns. But if you're wondering how those things work and what confluence looks like, I have some pretty decent examples in those videos, and we'll be having a good time tomorrow night. Look forward to it. I had a couple of questions in the den here, and one was Apple, what do I think of it? Looks to me like this thing has pretty much had its bounce out of the bottom. That's right, coming back up to the resistance levels. Is the volume great? No. Is the volume off the bottom much better than the last leg down? Yes. It's going to probably be in this trading range between 485, 496, and 385. Is the day of this thing probably going down for a long time over? As long as they have 10, 15 billion to buy every time this thing gets weak, the answer is yes. My guess is this thing's they're going to attempt to make the stock much less volatile, so that the funds that want to buy this for the dividends are going to be much greater. So I think both the management and Wall Street has seen the way to offload as much of the stock as they can to the masses, because, of course, that's what Wall Street's all about, is pushing stock, is this thing's going to get in narrower and narrower trading ranges, and it's going to be all about the dividend and not about the growth. And I think we've seen the first chapter. Now it is the chapter from a growth company to a yielding company, and we're seeing probably the fast money continue to kind of move out of it, and we're going to look at the people buying this thing for the long-term hold and yield. But it's pretty much how the market works. It pushes the stock up and makes you think that $450 is a great price on this stock. It may or may not be, but the idea is that once it's $700, $450 sounds like a great deal. And the question is that correct? I continue to see them losing more and more market share, and especially in China, not being able to gain a leg into that marketplace. Unless they have some really decent product following this that we do not know about yet, it can drive the kind of margins that they had on the iPhones, which I think is almost impossible. It may be the product of a century when we're looking about high-yielding products with margins in that. I mean, the only other company that even comes close to this is Intel, with basically 65% margins. I actually wrote about them in my last issue of the Tech Insider, and some of the stuff they're working on. Anyway, we're going to see you tomorrow in the studio. I'll see you tomorrow night also in the webinar. Make sure and sign up. See you then.